This weekend, Barron's put out its magazine, and on the cover was a picture of gold and a title, Gold Rush. Investors are piling into gold as a haven in chaotic times. How long will it last? Well, two things. First of all, when Barron's put something on a cover, that's often the kiss of death. Let's hope not. Second of all, investors aren't really piling into gold. It's making the news a lot in the Western media and around the world, the record high prices being set. But let's take a look and see who's buying gold. And then we're going to take a look at what the seasonal trends are and what could be happening to the price of gold coming up shortly. This graph shows the price of gold, right here, this parabolic gold line, and this black line, which is the number of ounces held inside the North American gold ETFs. You can see that the number of ounces held has been going down. Yes, we have seen a little bit of improvement here, a rise recently, but this does not show that investors are really interested in gold yet. The price of gold is moving higher and it's making the media with all-time highs, but North American investors really haven't shown strong interest yet. This graph shows that the ETF, GLD, so the biggest ETF for gold, posted a $1.3 billion outflow on Wednesday, the third largest on record. Here, you can see that right here. If investors were such big buyers of gold, you wouldn't see large outflows at this level. So yes, once again, we are seeing record highs and a lot of media attention, but we're not seeing North American investors really interested in gold yet. This graph shows a little bit of the story here. So this white line is the percentage of treasuries as held by foreigners as a percentage of government debt outstanding in the US. And it has been going down. And if we take a look at the blue bars here, these blue bars have been going up, and this is the percentage of amount of gold being held in foreign reserves by central banks. So this is central banks that have been increasing their purchases, mainly non-Western central banks, by the way. It's not just central banks. Look at this. This is the Chinese gold-backed ETFs, and there's 4 of them here that are being measured. And if you can take a look at the trend here, well, it's very clear what's happening here. We see this huge spike that's happening in April 2025. So Chinese investors are looking at the situation in China with tariffs, and they're scared that yuan's going to be devalued, and they're saying, well, what do we do? We're not really comfortable with our stock market. Real estate's not going so well. And so what we're seeing is gold moving higher, and they are big buyers of gold. They see the value of gold, and so they have been increasing the amount that they're buying substantially. However, gold does have a seasonal trend of weakness in May and June over the long period of time from 1984. They are the 2 worst contiguous months for gold. This is from my website, alphamountain.com. And the last tab is called Graphs. You can pull this up for gold and you can see these charts here. And May and June tend to be weak months for gold. Doesn't mean that gold's going to go down this time. It just means on average this tends to be a weaker time of the year, and it's something that you should be paying attention to because it is a headwind for gold to move higher, especially because gold has done so well recently. If we look at this chart here, the light blue line is gold in 2025 year to date. It's a strong performance. This other blue line here is the average over the last 5 years. So on average, we have seen gold actually move down over the next few months or a couple months. Gold tends to start a strong seasonal period again in July. It can start in June. We find June tends to be an extremely volatile month for gold, so that there can be some opportunities to pick up gold if that does take place. Where are we right now? Well, this is a parabolic move for gold. That's a very strong move. It's always difficult to tell when it's going to be some sort of correction. And yes, longer term, maybe gold moves to $5,000 or $6,000. But in a parabolic move like this, we can see some sharp pullbacks here, even when it's moving higher, something to watch out for. And you can see here that we have seen the RSI actually trending down, even as the price was moving higher here. So that divergence does indicate a little bit of fragility for the price week point of gold. And we have seen gold become moving from an overbought position with the RSI moving below 70 and cross that cross. Sometimes indicates that perhaps we could see some price momentum weakness coming up. Despite this potential for a little bit of a pullback on a seasonal basis for gold, the long-term prospects are strong for gold. And in addition, that chart I showed earlier of the ETFs for North America gold ETFs, actually going down over the last couple of years of the number of ounces held of gold, really says that North American investors are not big buyers of gold. And I think that's because they've been much more interested in other sectors of the market, like the technology sector of the market. And if and when that changes, and we start to see more interest from investors coming into gold, that could actually put a lot of upward pressure on the price for gold. Now, I don't know when that would happen. Perhaps if we did see technology actually suffer more of a correction here, investors really start to scramble and say, well, where else do I want to go? But it's definitely something to watch out for. Thank you very much for joining me today.